Hi, it's Jerry Fiskus, the Loan Man. I'm here with Lisa Sindowitz, and this is the first video that I've done where I've actually prepared nothing. But Lisa and I have been working together since the mid-'80s, and I actually began my career at Great Western Bank in 1983, and I think, Lisa, you started when?
1985.
1985, and boy, were things different then than they are now. They were so different. So, Lisa, you were working with me, and actually at one time you were actually managing and underwriting my loans.
Yes,
But
I was.
how are things different today, do you think, in a general sense, from the way they were in the 80s?
Well, I think we went from, in the old days, we actually took a file, we took the file apart, we looked at all facets of those loans, from whether it be income, credit, assets, and so forth. But it was also a learning process with the file itself, because you weren't just looking at numbers. You were gathering the data to make it, to make it solid that you knew these people were going to pay the loan back. So this is long before FICO scores. This is long before AUS underwriting. This is long before any of this impact took place.
Yeah, I remember, because I remember when I first started, I had one manager, and I would go into her office, and if I could present a good enough case for her approving a loan for someone who had terrible credit, if I could bring a tear to her eye, she'd sign off on it, even on 95% loans. It was just really, that was the name of the game. So contrast that. Well, let's just take one step to,
Right.
let's say, maybe where we were 10 years ago, when we were at WAMU, and a lot of stated income loans.
Tremendously stated income loans. Yes.
But then again, we approved a lot of loans that made sense then,
Yes.
that we won't approve today.
No.
Let's walk through a scenario today at Caliber Funding, which it's a great place, by the way, to go to for your next loan. I just briefly, before I was employed by Caliber, I worked for WAMU, Great Western, American Savings, WAMU, and then my last 2 years I was vice president mortgage lending at Bank of America. Big company, but too big of a company, so there are many escrows that were supposed to close on time didn't, but they didn't seem to care. And underwriting was tough, but I think it's, in all fairness, it's pretty much, it's difficult everywhere today. So you can't just walk through and get a loan if you don't qualify. No one can do that today. But at Caliber Funding, if someone applies for a loan, let's say today, what is the process? I take the application, and then you look it over, and then you tell me, you kind of go over what exactly we need in as far as documentation.
Right. Basically, after the application is taken, we want to obtain all of your income. Well, if you start out as, let's say, a salaried customer, you want to provide all your 1 month's worth of pay stubs. You want your 2 years W-2s. If you are self-employed, you will have to, and that's a Schedule C person, you'd have to provide 2 years of 1040s. All schedules need to be attached. Possibly you might need to do, if you're late in the year, a P&L, usually only for information purposes, but just so they have some idea if they're still on track. If you're a corporation, then it's 2 years 1040s, whether you have 1120s, 1065s, all of the corporate tax returns.
And that depends on the percentage of the
Correct.
corporation that you
Anything
owe.
over 25%, you
Right.
would definitely have to provide all of that
Now,
documentation.
once you've gathered that all up and you've posted it on a list, you've given it to me on a list,
Yeah.
we call the borrower, and hopefully we get it from him fairly quickly. Because if we don't, then the clock is kind of ticking as far
Right.
as getting him approved.
Right.
But in the meantime, we have documentation that kind of goes out to the borrower that has to get to him
Right.
fairly quickly, right?
Within 72 hours of receipt of the application.
He or she have got
He
to
would
get
be,
what?
he or she would be receiving a good faith estimate, which by law now has to be sent to the customer, which gives every single fee, whether it be title, escrow, what the loan charges are.
No
any-
estimates.
No estimates. This is a ground zero. It has to be within a very, very, very small tolerance, and the borrower has to approve it. So therefore, they not only have to look at it, but they have to approve it and get those disclosures back to us in order for us to even proceed with the loan.
Even 2 or 3 years ago, when we were at WAMU, things were not that rigid. I mean, we could take an application, and I remember that I would collect an appraisal fee at that time after I determined, based on experience and my abilities and my wisdom, that this person was going to most likely get a loan. Also, we had to look at loan to values, and loan to values were not a problem 3 or 4 years ago, like they are today, when people think their homes are worth a lot more than they are.
Right.
And even if they don't think they're worth what they are, even if they think it's worth what they are, well, what it is, the bottom line is, most of them are upside down anyway. So it's
True.
very tough to do refis today, but the rules today are much more strict.
Absolutely.
So what happens if the truth in lending and the good faith estimate, let's say you just kind of take your time, you decided, well, I'm busy, I'll send it out when I get around to it. What happens?
Well, like I said, if we don't get it out within that 72 hours, we don't get the loan, period. And then on the other score, if the customer doesn't reciprocate sending them back within a short period of time, we have to wait 10 full days until we can move forward. So either within that 10 days they'll send them back, or they don't respond at all, and then we could go forward on the assumption that, well, we'll just wait until, we can contact the customer to obtain additional information. But you're talking a long stretch,
Mm-hmm.
and then of course you get to a 30-day mark, and we have to make some kind of a decision then as well.
And we haven't collected any money from them yet.
Absolutely, we have
So
no
we could be
appraisal.
spinning a lot of wheels.
Absolutely.
But and actually, I've been here 2 or 3 months, and we've done some nice business. But fortunately, I think customers today, there's a certain amount of integrity they have. So when they give you a commitment that they're going to be going with you, and we've been fortunate that they all
Yes.
have gone ahead and through it with the loan. They haven't been playing any games
That's
with us,
true.
which people can do right now.
Absolutely,
They can do
the
right
people
now.
can definitely shop. However, I guess the benefit though is because of the new good faith rules,
Mm-hmm.
and credit is more impacted by inquiries today. It really doesn't
Oh,
benefit
true.
customers to do this because
Right.
it just delays their process of where they're trying to get even
Mhm.
further.
Mm-hmm.
So it's not really an advantage. If you're going to do your shopping, you need to do it on the phone. But when you
Mhm.
give somebody an application, you seriously need to go forward to get what you're looking for.
Mm-hmm. So let's say we're doing a refinance, and the borrower owes $400,000, and he says it's worth $500,000. And I think most of the time I pull the property profile up, and I might go to Zillow and see what Zillow is valuing because they're pretty good. And so it's $500,000, but I need $500,000 to make the deal happen. So I remember several years back, I could call the appraiser that was doing the appraisal, and I'd say, listen, hey, Mike, or Bob, I want you to protect the innocent here. And it was okay then. I said, listen, I need $500,000 to make this happen. I can't do that,
No,
Kenny.
those days are long
I'll
gone.
probably lose my job. in
You'll
a
lose
heartbeat.
your job and mine as well.
Yeah, you can't do
No,
that.
you cannot contact the appraiser.
I can't
at
even
all.
talk to them.
No, and technically, even the appraisers really aren't even supposed to talk to borrowers. I mean, they can say hello, how
Uh-huh.
are you, but any information. This is supposed to be completely an independent process,
Mm-hmm.
and it's difficult because those of us who've been around, you're used to having communication, but today it's off limits.
And if you
Off
miss it by
limits.
$5,000,
You miss it by $5,000.
oh, that's terrible.
Yeah, that's
That's
not a
terrible.
good thing.
That's not a good thing. But I think you are allowed to go back and appeal.
Yes, you can. You can dispute it, and we do have that process.
And the odds of that being overturned are slim to
Pretty
none.
slim.
Pretty slim to none.
Yeah.
So we have the appraisal, we have the processing, and what about getting loans approved? Are underwriters tougher now than ever, would you say?
Well, I'm not sure it's obviously we all like to say that it's the underwriters, and I do think that is partially true. But I think our federal guidelines and of course our investor guidelines and just in today's economy, we are definitely so much tighter than we used to be, and there's not a lot of leeway in
No.
certain respects.
We just had a deal we had, and to qualify, the borrower had to pay off some debts, And as it turns out, not only do they have to pay off the debts, they have to close the accounts. And I thought that was absurd because I've never had to do that. As it turns out, that's one of the new requirements. And there's
Yeah.
nothing I can do about that.
Yeah,
Those are the
days
requirements,
of
secondary market
Right,
requirements.
yes.
And if you don't meet those requirements, then we have to buy the loan back.
Absolutely.
Just like that.
yeah, there's no negotiating power
No,
anymore, and
no.
that's where it's kind of difficult sometimes. I mean,
Mhm.
we really have to make sure that things are. Unfortunately, they do have to fit in the box.
Mm-hmm.
But I will say that Caliber does. Their customer service is excellent. They do get the loans underwritten in a very short period of time, and
It's-
that's not the norm out there. That is not
That's
the norm.
frankly why I decided to come back. I thought I was retired from the lending business in January because I just had it. But then the folks at Caliber gave me a call and they said, listen, we do things right. We do things relatively quickly. And we're a team, and we're
Absolutely.
trying to make loans, and we're trying to make them fast and easy, but not really fast and easy, but relative to maybe other companies, maybe relative to the bigger banks, which they don't really care that much. And when I was at Bank of America, I don't want to disparage Bank of America too much, but if an escrow didn't make it, it didn't make it. And if we had to just ask the customer for some documentation that we all knew was irrelevant, there was not much I could do about that. So that kind of caused me to just leave the business. But I'm back, and I'm enjoying it. And so far, but 2 or 3 months at Caliber, it's a different ball game. It's a different
Absolutely.
attitude.
Absolutely.
Everybody wants to make things happen, and they want to do
Absolutely.
business again. So that's pretty
Yeah.
refreshing.
Well, and I think we're poised in a part of the market too that will allow Caliber to grow,
Mhm.
because being that they do have not necessarily the full banking mentality, we definitely can do things in a lot more of a productive manner than some of the banking institutions.
Mhm.
And because we don't have all that overlay. We can
Yeah.
get direct to underwriting, we can get direct to processing,
We
where
had
you
an
can't
issue.
always
We
do
had
that
an
at a
issue
big
on a
bank.
file today, and a condition came up that we felt was
Ridiculous.
ridiculous, and we're about to order the loan documents, and it was a deal killer
Would
for
have been.
sure. But we took care of it.
Absolutely.
You took care of it.
I took care of it. And
But
But that goes with the teamwork at this company, and the people do listen, and that is the key in this industry. These big banks and so forth, there's
Be
just no
careful.
there's
We
no
don't want anybody-
communication to
yeah,
speak
yeah.
of. You know that.
yeah, and it was like my time in the Air Force, where I just never knew who was in charge, and I never could go to anybody. But that's a different story
No.
entirely. Anything else that we want to cover here? We're now in our office in Valencia, and we do a good job.
Absolutely.
And I
Absolutely.
think it's an attitude that we have that's conducive to us
Prospering.
prospering and being something that customers will be happy about. I didn't quite say that very well, but I think there's a certain attitude of professionalism and
Yes.
concern and consideration that reflects well on us, and is a good thing for our clients to experience.
Well, and I think we do have the experience as well, and there's a lot of experience here at Caliber. There really is. There's
Yeah,
a
you
lot
and I
of experience.
alone, I think it's 50, 83, over 25 years, and you're about over 25
I'm
years.
over 25 years, right?
Yeah,
But
so-
even
so
within
it's
the
a lot of
management and
experience.
the operations, there is a lot of experience in this
Uh-huh.
company, and that really, really is a big
Yeah.
help.
Yes.
And
And one more thing, I think when customers come to me for
Mm-hmm.
advice, they get advice first. I really don't try to put them in a loan. I don't try to sell them anything. I don't try to close them. I really want what's best for them, and that's always been my attitude. And yours too.
absolutely, absolutely. We learned that a long time ago, I think,
Mhm.
and it's been the best for anybody.
Well, I think we covered a lot of ground. I think this has been fun. I think it was a good thing I didn't prepare anything. It's the first video I did where I just said we're going to sit down and wing it, and we've done that. But a lot of things we've said a lot of good things that can hopefully benefit a lot of people who hear this video.
Absolutely. Absolutely.
Anyway, thanks for listening to us, and hope you have a good day. Thanks.
Thank you.
Bye.